For the DAO discussion today, I really want to focus on Stefan's simulator. Mark had done a few presentations for us, a couple of explainers and demos. We had interacted, engaged with the community and done some samples that they had given us, some requests that they had for us to run through the simulator. That is what I referred to in the event announcement as the carbon strategy visualization tool. What Stefan has is also a simulator, similar but different, as you can see, as he's sharing his screen. Stefan, if you want to join us, can you unmute yourself?
Oh, no. Okay, I was on mute. So now here I am. Hi.
Awesome. Thank you so much for joining us, and thanks for doing this demo of your simulator.
All right. So am I ready to go?
You're ready to go.
Okay. So if you have questions, please do not hesitate. Jen, can you just explain how it works with questions?
Yes. So Glenn, I don't know if he has yet, normally kind of pings everybody in the live stage calls under community on the left. If anybody has any questions, they can post them in there. Otherwise, for this particular stage, you're not able to put your hand up. If you ping me in that live stage calls, though, and just let me know that you'd like to come up and ask your questions directly, by all means, I can go ahead and Glenn can help me out with this, give you the stage as well.
And Jen, I'm not monitoring those, so you tell me when there are questions.
Yeah. Yep, absolutely.
Okay. All right, so welcome to the presentation of the carbon simulator that you see here. And yes, I think it makes sense to explain a little bit what we are. So this is our brand new website, really beautiful. And resources are all the way at the bottom. And you probably, and I hope I got my things right, obviously everything is based on the white paper, which might make sense reading if you want to do these kind of things. And there is what is called the interactive simulator. Now this opens a Jupyter Lite thing, and the simulator is in there. I'm going to come to there at the moment. The simulator, what it really is a Python library. And this Python library is actually distributed on PyPy, so you can install it using pip install carbon simulator. And this Python library is meant to be used within a Jupyter Notebook, Jupyter Lab framework. So very quickly, the simulator repo has here carbon, all the code. And if you're interested in actually running the simulation yourself, I'll invite you to look at this helpers directory. Because actually the simulation code and like a lot of the code here is not really library code, but this is what the simulation that I'm going to show you later on uses. And if you don't understand what the simulation is doing, you want to do something else, you want to change something, you can just take these files out of the carbon helpers and modify them as you see fit. But this is where they are. The other thing that I want you to bring to your attention is the resources area here. So if you want to know how to use a carbon simulator, there are really, at this stage, dozens of workbooks. So they are classified into demo workbooks, and you see that there is a Carbon Sim Demo 7.4. And the simulator that I'm going to show you is essentially an updated, it's like a really refined version of this one. From time to time I update this one, but because it lives at a different part in the repo, the one here might not be the same. But if you are surprised why it's called Demo 7.4. Well, because there are actually a lot of other demos that show you the different functionality of the Carbon Simulator, because the Carbon Simulator at the basis is not an interactive tool, but a Python library, and we just made with this Demo 7.4, we made a really nice interactive demo out of it. Also, in terms of more reference, if you want to see how things works, these are really a lot of books. This is essentially all our tests. This is all our automatic tests that run as that run every time we run a release. But they give you a good idea how to use certain things. So if you want to know how the Carbon Simulator works, you have essentially example code mixed with assertions in there, and it's actually a good demo of everything that has happened. So that's just what I wanted to give this as an advance. So the important thing is that the Carbon Simulator is kept extremely close. It's a Python code. It's all in Python, but it's extremely close what Carbon actually does on chain. So that's the whole point. We're trying to keep it really closely in sync. And that's a bit the difference to Mark's tool, even though I think Mark's tool, ultimately we're going to converge, but Mark's tool was a little bit more about demonstrating and teaching, and the core of this here is, this is actually our working tool that we use to make sure that the smart contracts are doing what they're meant to do, and that that's a tool that we use to check the outputs of the smart contracts, but we're obviously also making it available to the community. I also want to quickly talk about Carbon, because it's still, especially because it's recorded, it probably makes sense to give a short intro what Carbon actually does, so then and how it's different from a normal AMM. So basics, Carbon has an invariant curve like any other AMM, or like most other AMMs. The curve is a concentrated curve. So it is between two prices that we call PA and PB, or sometimes P start and P end. The curve capacity we call Y int, because that's the intercept. And the curve loading on the y-axis we call y. This is the amount of tokens that are on a curve. And PM is the marginal price at which the AMM currently trades. Now, the biggest innovation in Carbon is that the curves are asymmetric. So trades on a single curve always go one direction. You always go y-axis down, and when you go y-axis down, you go x-axis to the right. And the tokens don't really stay on the x-axis. So the only tokens that are on a curve are the ones on the y-axis. You can never trade, you can only trade back when you reload a curve, and I'm going to talk about here in a second in the linked curves. So generally, when you set up a Carbon position, it is two curves. So an ETH USD position is sell ETH, buy USDC, and there is another curve that sells USDC and buys ETH. And the curve, the left curve sells ETH, buys USDC on the x-axis, the blue arrow goes to the right. That's the way how you reload a curve. The linked curve is reloaded or loaded initially with the transferred USDC, and it can be sold down from the other curve. So that's important to understand. To understand the simulator inputs, it's important to understand how things work together. Now, the minimum viable simulation in the simulator is very, very simple. So you say sim equals Carbon Simulator UI, pair equals ETH USDC. So this creates a simulator object in Python. So that's obviously old Jupyter Notebook stuff. Then you add a strategy, sim.add strategy, and a strategy is a set of linked curves. it's a strategy that is selling ETH. You don't have to say USDC because you already said this above when you created the simulator. Which is just the default curve. You can have multiple pairs in there. But if you want the default pair, you need to only say what you want to sell. And then I'm going to show in a second what the other parameters are. And then you execute a trade where it says sim AMM sells half an ETH. And this is what the AMM does. The AMM sells half an ETH. So, talking about strategies, a strategy is two curves. It's a bid curve and an ask curve. So when you say add strategy ETH, the first three numbers in red, they are the ask curve, so they're selling ETH. So there's one ETH for sale, starting at 1,500 and ending at $2,000 per ETH. And there is a bid curve, the ETH, where the AMM buys ETH. The bid and ask is always seen from the side of the AMM. And it has $750 already on the curve, starts at 1,250 and goes to 1,000. And then for executing a trade, there are a number of various options. Because at the beginning we just had sells and buys, but you get just completely confused because you don't know whether you are selling or the AMM is selling. So we actually have a function AMM sells ETH, which is exactly the same function as trader buys ETH, just to make clear who does what. And we have a function AMM buys USDC and trader sells USDC. The difference between those is that one is called match by source because we determine how many ETH we want to sell. The other one is match by target, which is how much do I want to buy. Ultimately, the trades are the same, but obviously you determine one amount and the other amount is solved for. And then on the linked curve, the AMM sells USDC, the trader buys USDC, the AMM buys ETH, the trader sells ETH. So you see there is, for these two curves in total, there are 8 different combinations of what you can do, depending on which direction you want to trade, what you want to specify, and whether you want to look at it from the angle of the AMM or the trader. But obviously AMM sells and trader buys is the same. It's just simply for you understanding. Okay, here I'm not going to go further in these examples. The thing it's not entirely up to date, and what I'm going to show you now is going to be much cooler than than this anyway. You see that here, yeah, this is from demo 7.1, this is from demo 7.2, so we're actually at demo 7.4, but at this stage the live demo is actually cooler than the presentation itself. But I thought it was helpful to introduce this. And by the way, this is all on in the GitHub. This is in the notes folder on the in the Carbon Simulator, so it's in resources notes. Yeah, that's our white paper. As I say, it might make sense reading that one. That's the PyPy, just to say that that we are there. So that is the main repo. I already showed this to you. Now there are 2 more repos, and there are 2 more repos because we have 2 distributions of what I'm showing you. Now what I'm showing you now is not the actual Carbon library, but this is a Jupyter workbook, or rather a combination of Jupyter workbooks that sit on top of the Carbon library. And they actually do not contain the Carbon library, but they install the library from PyPy. So they take whatever is the latest version published on PyPy, which, by the way, might be a little bit later, and I talked to you about the implication of this about this as well. Now, I'm showing you how to run these things directly in the browser, zero install, because this is super cool. It's also very safe because obviously, I mean, well, I hope you can trust us to install the Carbon library, but obviously if you don't want to install the library, then you can just run it in the browser, which is, yeah, doesn't require any install on your local machine. But obviously if you have the Carbon library downloaded, or if you have the repo downloaded, you don't need to download, if you just download the repo, place it somewhere there, and especially if you want to use the latest features, you can just use a beta branch. So if you have the repo on your computer, you can literally just put these workbooks in the right folders, and they're just gonna run. So you don't have to run them on the internet or on the browser. There are two repos because we have two different distributions. One is Jupyter and one is Binder. We started with Binder, we moved to Jupyter. Both have advantages and disadvantages, so we're probably going to keep them both. And I'm going to talk about this in a moment, how they work. So this is Binder. And you see the first thing, server connection error. Why do I get a server connection error? Because I timed out. Because Binder is essentially a Docker install. It's a really cool tool, but it can be a bit temperamental. So Binder essentially is a network of servers that have compute capacity that has been donated by people. And let me actually start this. So that starts a Binder notebook. So whilst I'm talking, we can have a look what's happening. So Binder, when you go to Binder...
Stefan, can I interrupt you for just 1 minute?
Yeah.
I have a question that came in from Lex Fur.
Yeah.
He was looking at one of the links, and he's curious if the simulator.carbondefi.xyz lab index, if it's normal that he can edit the files there.
Yes, I'm going to talk to about this in a moment. He can edit them. This is local edits. And by the way, if you do this one, you generally are better off if you open it in incognito window for things that I'm going to talk about in a moment.
Cool.
So this here builds a Docker install. It already found an image, so now it is requesting a server. It found a server. Because I opened it before, the server is already present on the machine, and it's trying to go there. I don't know why it is pulling the image again. And if we are lucky, then this Binder instance will open as a Jupyter Lab. If we are unlucky, we need to try again. Also, what is important to understand, this is the correct URL. Once you're in the Jupyter Lab, the URL in top will change to the URL of the server instance that you have been allocated, which is a temporary URL. So let's see how this one is going. Now, Jupyter Lite, which is simulator.carbondefi.xyz, is absolute magic. And so a friend of mine recently told me about it. I said, look, this can't work. I mean, it's like bloody Python run in JavaScript, but it's not quite run in JavaScript, it's in WASM. But Jupyter Lite actually runs a full Python installation based on WASM in your browser. And this answers the question, yes, you can edit the files, but you actually edit the files in your own browser store. So you can, when you come back to the site, they're going to be changed, but these are your personal files living in your browser. So you're not going to change any of our files, but this is really just stuff that you're doing. Now, one thing that can be a little bit hard to get rid of, and this is what I'm saying, is when you open this, you often want to electronically see. Do you see the menus when I right click? Yeah, you see the menu. If you don't open this in incognito window, then it can get stuck at an old version. So what you can do, and by the way, you see that's actually pretty big, so it downloads like 132 megabytes of stuff into your browser cache. So you go right click, inspect window, application, clear site data. If you do this, most of the time the site data is cleared and it reloads the latest version of Jupyter Lite. but your mileage may vary. So what you really want to do is you open it in a new incognito window, then you get a fresh install in the latest version all the time. Having said this, if you don't do it in an incognito window, you can actually, when you go back to the page, you close the page, you open it again, your changes are persistent. This is also pretty cool. So these two things are actually cool. So let's look at our binder. See, our binder still didn't get anywhere. That is kind of par for the course. So, but if I open a new instance, then this often works. Often this starts right away because the first image just gets stuck. And not now. Sometimes you even get some error messages of, oh, can't connect to a local node. So binder is cool, but binder is a little bit, it works or it doesn't. Now, and what binder does actually is to say, it launches a server on Docker, so your Jupyter kernel runs on some server that someone donated somewhere, whilst in Jupyter Lite, your kernel actually runs on a WASM runtime in your own browser. So these are the two options how you can run those on the directly from a browser. And I would definitely recommend this is how you get started. If you get more serious about it, and for the demo, here I'm also going to do it that way. You can run it on the you run it locally. In this case, you need to have a Carbon library installed. And you just run these things as Jupyter notebooks. So when you open this, they all look a little bit like this. Sometimes you already, I think in Jupyter Lite, you're already in this content directory. So the root here already is this. If you run it locally, it's actually a directory called content. So yeah, that's the same data demo 7.4. And the difference here is you see Carbon, because I actually put the Carbon library locally as a symbolic link. This works very well in Apple, so I always have the latest version of the Carbon library. I don't need to use the one from PyPy, but I link to the latest version that I have on my system. The sheets are in demo 7.4, and most of the key thing was okay. The three things that you're interested in are scenarios, demo 7.4, and data. .py files are Jupylite. It's Python only of the IPYNB. This is good for diffs. If you don't know Jupylite, have a look at it. Best thing since Jupyter Notebooks. I mean, it's like it's absolutely amazing. There's just no way not using Jupyter when you use Jupyter. Here, I told you about Carbon helpers before. Here are actually the latest version of the helpers of the libraries, and the reason is this: if you look at this thing if you download it in Binder and Jupyter Lite, because it uses the distributed copy of the Carbon library, it might be a little bit behind, because that's only the release branch. And if I use some features in the simulation that rely on the beta branch, I have to copy the simulation and the strategy libraries locally to make sure that I have the latest versions. Then, yeah, one thing, I mean, I'm sure you're all Jupyter Lab gurus, but if not, if you actually want to run it, it's prettier if you click Simple on the left. And the sheets are all designed that you can navigate really nicely with the table of contents. Yeah, with the table of contents, you just go 1, 2, 3, and you go to the thing. And this is really what I recommend. So here's a file thing, but here is if in a spreadsheet or in a Jupyter notebook you navigate, you can navigate like this. So when you run it the first time, you're gonna get a few information things. So here it tells you that you're using the local copy of the simulation library because it's 3.3.2, whilst Carbon is still at 3.3.1. It's using the local copy of the strategy library. There's no particular reason. Having said this, there's no reason because I'm actually running Carbon 2.3.2 beta, whilst on PyPy we are at 2.3.1. So yeah, that's a reason why I need to give the local copies. The advantage is also if you want to make any changes in the simulation code, you literally can just do this locally and it changes. You can change colors, you can change line styles, you can change the size of the chart, whatever you want to do. The other thing that you want to keep in mind, there is these things here, collapse all code and expand all code. Yeah, there's quite a lot of code here, but this code is obviously pretty ugly. So on this sheet we just do collapse all code and the sheet gets very pretty. If you want to expand particular cells, you can just click on the 3 dots and you see those. The reason why I expanded those is if you want to, because you want to make your own charts and you don't like my color scheme, you can define your own color scheme. Dark mode, light mode, color scheme here. And you can set all kind of sim defaults. The sim defaults override. That's an interesting thing, probably because I played around with Git. So essentially you can define the default values for here. But so now collapse all outputs, which was wrong. It's not collapse all outputs. So let's do expand all outputs and try this again. So we collapse all code. So the scenarios is essentially the demo version of the simulator. So this is like the fewest choices. When you really, and I'm using this when when we're really talking about Carbon with people that we want to talk about and we want to show them some simulated stuff. I don't want to do live parameter changes, so I have scenarios prepared and I just go through the scenarios. There's a 2-level selection process, but at the moment there's only one scenario sheet. But in theory, all the scenarios, they're here in scenarios and they're actually just Excel sheets. And this is how they look. Yeah. I'm going to talk maybe a little bit about the end, but like all the scenarios that are in here are there, and you see here there's a name, intro, explainer cycles, explainer gap and width. These are intro, explainer cycles, explainer gap and width. These are the ones that show up here. Now, there are 2 things that are absolutely your friend if you're doing this. There's A, run all cells. Generally, you shouldn't run individual cells on these workbooks. You should always run all cells. And sometimes you need to do kernel restart and run all cells. This is mostly related when these menus don't properly update. Because when you're updating menus, well, just to show you the code, if you do this, the menus only update when this one here fails. And the reason is when the menus update, they set back to default values, and most of the time you don't want menus to set back to default values. However, sometimes when things at the back change, these menus don't look that something changed, and then, so 2 of your friends, if first thing is run all cells, if run all cells doesn't do what you think it should do, you do restart kernel and run all cells. If this doesn't work either, ping us and we'll help you debug. But that's sort of the first things. So intro is just showing it's just a few scenarios, and this is actually selections of the other ones. So here we have a few scenarios. So explainer cycles. If you have seen Mark's presentation, then you have seen these cyclical charts, and this is essentially the same as Mark's cyclical charts. Now they are here at the moment all in the color scheme that we generally use for Carbon. I think for the presentation it is actually a little bit easier to do it that way. So that's the light color scheme. So this is how they look in the light color scheme. So now let's actually have a look how Carbon works and what these charts do. And so at the moment, so we don't plot the value cash, we don't plot the value total, we don't plot the value zero, we do plot the ranges, we do plot the marginal prices, bid and ask, we plot interpolated, and we do plot value gray. So you can actually choose what you want to see on the chart. And by the way, you can even, if you only want to do one side, yeah, you can literally just remove one side, for example. But now we want to do bid and ask. So what's happening here? What's happening here is that the market price starts here and it goes down. So you have two ranges, the green bid range and the red ask range. The price, so at the beginning they are both full. You see they're full because the marginal prices are in the middle. So the thick lines are the marginal prices. The market price goes down, and once it gets into the range here starts converting. So we start with cash, so we are buying RSK. So say we are buying ETH, we have US dollar, we're buying ETH. We're going down, and the marginal price follows, because whenever a marginal price is executed, we're moving on to the next one. Yeah, because you can actually think about a range order just as a collection of limit orders that is met one after the other, like a limit order at every dollar. They're all met, and then the marginal price moves on to the next one. Until here, we're at the end of the range. We're going lower, but obviously there's nothing more left to buy. We're going up, nothing happens because the range is empty, so nothing can happen. We're going up. Now we are in the ask range. What is the ask range? Sell your RSK assets, so sell ETH if you want, sell each against dollar. So now the same thing happens, but on the other side. So the AMM sells the risk asset, marginal price moves up until we are there at the end of the curve. Here we have the same things with a higher frequency. Yeah, you see it overshoots, and the AMM stick there. And the other thing that you see here, which is really important, it's actually better to see here. So here the AMM, the green range, the bid range is empty. Yeah, and it doesn't change when it goes through here. The point when it changes is when the price goes into the ask range, because everything, so here it sells ETH against dollar, and the dollar moves on this curve and recharges this curve. Now you may ask, why when it goes down doesn't it recharge this curve? Because when a curve is full, it is just spread evenly over a curve. So it still, if when it goes down here, it still goes on this curve. You just don't see it because it doesn't change the marginal price, because the marginal price is already as good as it is. So the curve, instead of changing, being filled from the side, just gets bigger. Yeah? So, and we just have these things with higher frequency. So in this one it's boring. But so let's have a look at, if you say plot value total. We run all cells. We have it in gray, but in gray is boring, so we don't want the value in gray. So sometimes when you want to look at the chart, but you don't want the price to be completely dominated, but you still want to see what's happening, you can do plot value gray, and plot value gray also looks better on the dark charts. But now we don't want plot value gray because we want to focus on the value that is happening. So the blue line is now your portfolio value. And remember, your portfolio at the beginning is half in cash and half in RSK. It's not the same amount shown there because they're in the thing, but they actually value it's 50-50. So you're somewhat sensitive, but you're 50-50. But so when markets go down, your portfolio goes down. When markets go up, your portfolio go up. Now, this is better to see here. So markets go down, your portfolio goes down. Markets go up, your portfolio goes up. up to this point, because at this point you're 100% in cash. Yeah, you sold all your risk asset, so you're 100% in cash. Because you're 100% in cash, you are completely flat up to this point when you start selling your cash against the risk asset, at which stage you start picking up some delta. Here you're 100% in the risk asset, so your delta is maximal. And then when you go up, on the next cycle, you go up higher. And you see here, at every cycle, you make like a big buy, sell, yeah? So you really make more and more money. You start with whatever, so it's on the right-hand side. So you're starting at 1,000 generally in a portfolio value. You're at 2,000, 5,000, 14,000, yeah? I mean, these are obviously big buy and sell cycles here, and they're signers, so they're not necessarily realistic, but they show you what is happening. So at every cycle, you just pick up more and more stuff, and you just go higher and higher, and you make a really nice return. And just at the end, it's just sort of the that's actually, so this is like the full technical information. I probably should have put it the other way around. Maybe I do that at the moment. The one that is interesting is here. It essentially shows you what changed from sheet to sheet. So this is all empty because that's the reference. This means PA01, 02, 03, 04. This is the different curves. Yeah, the different price curves, the higher frequency price curves. And we started with a different portfolio. We started at a different point because we need to start. We always want to start at the same time in the cycle. You start at a different point, and the comment is 6 cycles. It's just a number of cycles, and obviously it's wrong because here it's 5, and here 6. Okay, so that's the demo stuff. So that's a cycle. Here, it's another. It's another demo. This is about gap and width. So how you can set your ranges, yeah? So you have the ranges relatively wide. This has a wide gap. Here the gap gets a little bit smaller. The ranges are a little bit further together. The ranges are even further together. And now the ranges have no gap at all anymore. And now we're going there, we're changing the other parameter. We have the width. The range gets wider and wider and wider. You see, it's a percentage width, and because they're pretty big, it looks asymmetric, but it's actually asymmetric in log space. And by the way, and so finally, we also have ranges which are collapsed into a single point. So I think here they are literally they're just on top of each other, I think, and here they're moving a little bit apart, but they have 0 width and they're just moving apart. So that's the different ways how you can arrange ranges on Carbon in your strategies. And oh yeah, that's a pretty one. High frequency, low frequency. Now, there is one thing that I'm going to show you on the other simulation. So when you download data, you generally download daily data because this is kind of, otherwise it gets super full. You can work with high frequency data if you want, but this has all kind of issues, and especially if you want to compare things with high frequency data and having it aligned is like super painful. So the data generally is daily. But if you have daily data, you're missing a bit of volatility. What you're missing here is actually, you see that this is now a little bit more than it would be. But the highs and the highs are a bit higher, the lows are a little bit lower. And so what we can do is we can generate intraday volatility. The default setting for the intraday volatility is you match the volatility of the curve, and then you do Gaussian bridges, so you exactly match the old curve. It's just that you go with some volatility. You can see whether it makes a difference. Normally it doesn't make a big difference. What it sees, I don't know whether we see it here. Sometimes it makes a difference because it goes a little bit further into the into the range, so you're making a little bit more money. So if you only do daily data, generally you're losing a little, you're making a little bit less data when you do this high frequency, so it's sometimes worth checking. If you only want to see the high frequency data, you can also do that. You can sort of ignore the other one. Okay, so now we do real stuff. Crab walk, because that's like an important scenario where obviously where carbon really where carbon really shines. So we have actual data. We start in July 2021, and we go all the way up to whatever 2 weeks ago. So we're starting, and this is ETH and Bitcoin, and the price is in ETH per Bitcoin, as you can see on the chart. Your portfolio on the right hand side, the portfolio value is in ETH. You always start at 1,000, so starting with 1,000 ETH is actually quite nice. And so what's happening? You're going a little bit down, up, down again, up again, down again, up again. And what's happening? Yeah, here it's the risk asset here is Bitcoin. The cash asset is ETH. Should have done this as dollar in ETH, but anyway. So here it goes into, here it sells cash for the risk asset. So here sells ETH for Bitcoin. Here it sells Bitcoin for ETH. It goes above, because above it's all in cash, means all in ETH. It's flat. It goes down, it loads up again, it goes up, it gains value, it is above, it is flat again because it's all in cash. It goes down again, it loads up, it doesn't go all the way up. So this is why it's still, so it goes down again, then it goes a bit further up, it goes down again. But because it doesn't hit the green line, it actually doesn't transact down here. And it goes all the way up, it is flat. It goes down again, now it goes into the green, it transacts, it goes up, it sells a bit, and it goes down again. And because it didn't go all the way up, it still holds a lot of Bitcoin. So this is why it is still quite volatile on top. We made a good, with our hindsight trading strategy, we made a nice return going from 1,000 to 1,600 in a sideways market by selling high and buying low. That's if you set your range wrong, can happen, yeah. That's obviously where you would want to correct, and this is where carbon is nice because you can correct very quickly, and then you can just, so I think this is then just a little bit later, you can just change, you just set your range to the new area where you think prices will be, and these are just another few crab walk scenarios that I have here. So here are some scenarios about trending. So I said this is not a great one, but if you actually set the range right at the end, you can actually make out quite nicely, because then even though it's so it's down, you obviously you fortunately were in ETH, and then you manage to set the range right. You make money in a trending market, but obviously you mostly make money in a trending market with the with carbon if you get the ranges right. So this is, well, actually the trend up. Let's do the last one. And so also in the trend up, the nice thing in the trend up, you can actually, if you get this one right, you not only benefit from the upwards movement, but you also benefit from the up and down. And you can, if you want, you can also show your hodl value. So then you see how much better or worse you do than hodl. That is hodl. And you see that you're doing massively nicer than hodl. HODL is always the initial portfolio, yeah. So here, HODL is actually, because the initial portfolio was 100% in Bitcoin. Your HODL value is exactly the same as your price, but otherwise it is just, and here the same, but otherwise this is not the case. Just one thing, just out of, because it's just pretty cute, we can actually run Carbon in Uniswap mode. So which is when you run Carbon in overlapping ranges and you are careful of setting the capacity of the ranges and the initial holdings, then you actually operate exactly like Uniswap v3. And so these are a number of Uniswap v3 ranges. And what you're gonna see here is, this is also one reason why we did this, but I can't show this to you here. I could only show this to you in the other one. I think, wait, can I do, plot interpolated. Uniswap, for Uniswap it makes a massive difference if you have intraday volatility or not, because obviously when you make money, when you earn a fee on every 1% move, and intraday moves are often 1%, then you actually make, whether or not you simulate intraday makes a big difference. In Carbon, if the ranges are 20, 30, 50% apart, whatever you put as your sell and buy range, these moves don't generally happen intraday. So in Carbon, intraday simulation doesn't make, for separated Carbon ranges, intraday simulation doesn't make that much of a difference. Alright, so this is the scenarios. And now that we have the scenarios, let's move on to the actual simulation workbook. Now the actual simulation workbook does exactly the same, except that you can actually choose your stuff. And let's also don't do plot dark and don't do plot value gray, so run all, so let's do them in white. So on this sheet you really want to navigate here because it's getting quite big. Yeah. So let's go through the headings. Setup, a few settings. Save output to target directory. If you run simulations, if you want to, you can actually save outputs, and the outputs are going to go, the images are going to go here. Yeah, and the data is going to go here. So if you don't like the image, the entire data that has been generated in the simulation, you can also read from here. Now you can only read from Python, but you need to re-import it back into a Jupyter, and do something like this. So that's a data import, but you can get you can get it here. Anyway, so going back to, why am I in black? Oh, I'm in black because I'm actually not in the spreadsheet anymore, but I am in the thing. So back in the simulation. Show target directory listing is just whether you want to show the target directory at the end. It can be very long if you don't delete it. Generate doc and zip from charts. Now this is quite useful also, especially if you run it on the server. But this only works, and that's sort of one of the reasons. Actually, let's see why with our friends here. Yeah, now it worked, but probably now it's already dead again. Whether it worked here. So if we go on, the kernel is now dead. If you go on Binder, Binder is slightly different because Binder is a Unix machine. Binder has Pandoc installed and Binder has zip installed. And so what you can do then is you can put all the charts that you have in your directory into a single Word document and download them as a single Word document. So if you run a few analysis and you did it on Binder, and remember, Binder is going to disappear if you're not using it, so you really want to download the stuff. You can actually download it all in a single Word document, and then you can copy and paste them from the Word document or whatever. And you can also download them as a zip file, but you need to check these boxes to do that. And you can do clear files before each run. It's kind of, if you want to get rid of all this crap here, you can do this like this. And now only the files from the last run are there. Data selection works. The principle is the same as before, but it actually works very different. We have a number of data selections, and I'll show you in a sec how to actually do do more. So we have a few test ones, but the immortal ones, those were coins BTC, coins ETH, coins USD. Let's start with coins ETH. Run all cells, very important here. When you need to run it to get your next strategy source data selection. And then these are coins. There's a selection of coins, and they're all against ETH. And in coins USD, they're all against USD, and in coins Bitcoin, they're all going to be against a Bitcoin. And there's a selection which is coins cross. Run all. This is a bit fewer coins, but they are actually all every coin against each other. This can get a little bit long. And the data directory, I actually don't 100% remember. It's either, I think it's sometimes in here, but most of the time, so it can be shared, is one level up in data. So this is where they're sitting. These are pickle files, and I'll show you in a moment how you can actually generate those pickle files. So there is a code that allows you to generate them if you want to do them yourself. So going back to our sheet. So let's say we want to do coins ETH again. So run all cells is like I don't understand why these guys. I mean, run all cells is the one command that I'm using like 5,000 times a day, and I still haven't managed to make a shortcut for this. So Bitcoin ETH.
It's actually up there.
No, that's only one cell, no?
The double arrows to the right.
Oh, the double arrow? Well, this is restart. I don't want to restart. I just want to run all cells, but without restarting the kernel. So, okay. I don't know. I haven't found it yet. And it doesn't have a keyboard shortcut, yeah? Everything has a bloody keyboard shortcut, except run all cells. So, I don't know. Anyway, so if someone knows how to run all cells with keyboard shortcut, because I'm doing this so often. Invert, well, I show this in a second. So this is essentially what you do with the data. Whether you want to invert it, high frequency interpolation. If you click this, you get this daily data interpolated, and you can actually show here how you want to interpolate it. So here you say you want hourly interpolation, so every hour. You can do every minute or every 0.1 hours or every 2 hours or whatever you want there. And the factor 1 means you use the same volatility as your other curve, but you can do higher volatility or lower volatility if you want. And only AF means that you only show high frequency data, so you don't show both data series. Okay, so we collapsing all code again. And here's strategy selection. So that's important. So here you can choose strategies, and there's various ways of shown how to create a strategy. The standard way is like this: from MGV, from mean, gap, and width. Mean is 100, and 100 means the value of the spot that starts. Yeah, so because otherwise when you change your strategy algorithm, so the strategy is actually going to be shifted it's going to be rescaled so that the initial spot price is considered 100. G0.1 means you have a 10% gap between the ranges, so between the lower, so the inside gap is 10%, and I think. No, I think I changed it. So I think it's half this down, half this up. You see that. And width is 0.4 is 40%. So that's a wide range. There's another range here that has a gap. Now it has a wide gap, but it's a narrower range. So 0.4 gap, but a 0.1 range. This one is commented out. Mid 1, this is mid-sized, and this is a narrow strategy. So they're all from MGW. Now, what I wanted to show here is, but there's other ways. So sometimes, especially when you go through the data over time, you do not want to rescale, because you want to look at the same strategy over various periods of time, and you don't want it to be reset to the spot. So if you do it like this, with rescale equals false, this strategy is always like this. Hopefully the values make sense for what you're looking at. So 16, 18, 14, 10 is a Bitcoin ETH range. If you would do this on ETH Bitcoin, obviously it wouldn't make any sense, because if you would make it on ETH USDC, it wouldn't make any sense because it would be completely off. So fixed strategies, you need to actually rewrite those numbers. This is why I only put one there. It's just to show. And a UniV3 strategy is a specific way of doing a UniV3 equivalent. They are still a little bit not user-friendly. You can't start in the range at the moment, and you need to say whether you start below or above the range, because you need to fill it in a certain way. So they're still a little bit buggy. There are more to play around. So here you have all your strategies, and keep in mind there's a first one that is called slider, and we're going to talk about this in a moment. And here, for each of the strategies here, for each of those that are not commented out, you're going to have a checkbox. Yeah, so you can say, show me this one, show me this one, show me this one. And obviously you keep in mind, collapse all code. Normally you actually do not see them. So you choose which ones you want. Let's say we only want slider, wide, and narrow. Actually, we don't want slider for the time being. Charts, element, and look. We already have this before. Plot price, value cash, value risk. I haven't discussed plot value cash, so that might be a good opportunity to do that, even though those are not. Let's run those and let's see whether this is actually a good way of doing this. Yeah, exactly. So that's an interesting one though to show. So here, these ranges work pretty crap. Why do these ranges work very crap? Because we move out of the ranges very quickly and then nothing happens. On the other hand, we see that, and how did I lose my window? Here we go, here I'm back. We see that here there is actually a relatively nice crab walk. So really what we want to do is we just want to start a bit later. How do we start later? We set the start date. So the start date, 0 is at the beginning, 100 is at the end. This is just a percentage of the original data. We can also change the length. The length is always as percentage of the original data. Yeah, it's just the way I've done it. So we do it like this, run all cells, and now we are in a nice crab walk phase, and so now we actually make a little bit of money. Yeah, so we go from 1,000 here to 1,200, which is not bad for a sideways trending market. This line here is the percentage of your portfolio that is in cash. Cash being, when it here says ETH per BTC, then cash is ETH. Yeah, so it's your numeraire asset. That's the asset that is the numeraire for the prices shown. This is always what I refer to as cash. So you start here 50-50 in cash, which is, by the way, something that you can choose here. We can say, we can stay 100% in cash. Yeah, so we start 100% in cash. We go down. We're going to sell a bit of the cash. Then we're going to sell a bit of the risk asset. So this is why our cash hold is going down. We're going down. We're selling a bit of the cash. We're going to go up again. We're selling this up. It gives you this blue line. If you plot the cash line, you actually understand a little bit better what the simulator is doing. And so here you also see what's happening. Here you go up 100% in cash, because obviously you just zoom through these ranges. Yeah, they're very thin. 100% in cash. When you're 100% in cash, you are flat. You're going down again. 0% in cash, you go 100% in cash, and that's just all the time what's happening. Actually, you're not interesting here. You're not going 100% in cash. You see that because you're not flat, so you just wiggle here. And so that's interesting. Now if we say only high frequency, there's actually a chance that here we might go through all the way on the last day. No, we still don't go all the way here, because sometimes when you do high frequency, you go. Wait, no, that was the wrong one actually. Let's do this. Run all cells. So now we have the high frequency and the normal one. So that's a bit more tricky. So if you don't do only HF, yeah, see. So the blue curve is the curve without high frequency, and the light blue curve is what happens with the high frequency interpolation. And you see it's a little bit above, and the reason it's a little bit above because you generally you might be a little bit faster here. But what especially happens here is that here the high frequency pushed you all the way up, and you actually go flat here until you go down. And we can also see when you want to do only HF, then you again just see one chart. But obviously this chart is a little bit fake because this is not real data, but this is interpolated. This is interpolated data, but generally it is good enough. But you see here you're flat because here you actually went through the whole range, whilst if you don't interpolate, then you're not gonna go. You're not gonna go through the entire range because the actual daily data didn't make it all the way up. Okay, slider. Let's go back here. Oh, the one thing that is sort of another thing that you can do. So here this just shifts all strategies up by 27%, and this shifts them all down. It's just sort of if you want to play things around, you can play with these things. Sort of all these strategies are gonna be shifted again. But so let's put this back to 0, and let's turn our slider on and only our slider. This is really our flagship for looking at stuff. So the slider, all these values that you had before, you can change individually. So 100. Want a bit higher, you want to start at 130. So now we're starting at 130. So obviously starting at 130 is a bit silly when you need to probably adjust your cache because you're starting below. Well, here actually, so see the ranges are so high that nothing happening. So maybe we don't want to start at 130. But maybe we want to go a bit lower. Maybe we want to start at 70. Yeah, again, this wasn't particularly helpful because this range wasn't great. So though you see that these just don't work, don't go enough to do anything. So you here to have some meaningful simulation, you want to be roughly here, and then now here, yes, something happened, and this is nice. Now you can change the gap. Wider strategy. So yeah, the gap is a little bit wider, or you can do it narrower. And you can change the width of the bid and the ask range individually. So the bid range is very narrow, the ask range is very wide. Yeah? So this is what we have here. And the U thing is sometimes useful. You generally not, but you can start with utilization. When it's 0, they start in the middle, but you can start with a non-zero utilization rate. Sometimes it is useful when you actually start with your spot in one of the ranges, and you would start in the money. Otherwise, you can actually. So let's actually show this. If you put the range a little bit down. And we start with 100% in cash. Yeah, this doesn't particularly help us. Hang on. The point was whatever. No, this is. Yeah, this is now not particularly useful. What I wanted to show is when you start in the money here, you might not want to.
You shift it up by about 20%.
So if you start in the money, you and with the wrong asset for whichever reason, you might want to change the loading of your things a bit. Otherwise, you have a day zero loss. But these things are a little bit easier displayed when you. That's one of the reasons why I did this thing, because it's kind of doing these things on the fly is a little bit annoying when you try to figure out what you actually got wrong. Especially in a recorded conversation, so I'm not actually gonna attempt it at this stage. The last thing that I want to do, someone tell me something that they want to look at. Come on, Mark, tell me something.
Sure. Okay. Let's do Matic versus ETH.
Okay, Matic-ETH. That's our data download sheet, and this works. So I'm not going to go through this in detail. If you run it like this, it uses the free API from CryptoCompare. If you have an API key, there are ways of putting it in there. It is explained how to. Then you can do more. If you use a free API, it generally works for me in the free API, so I don't necessarily need to use our API key. But it might not always work, in which case you need to see the API key might be the issue. Now, by default, this is what happens. And the point is, you shouldn't just run this willy-nilly. So this is essentially click this, make sure that this is what you do is correct, and then run it again. The point being is this thing is going to be overwritten with whatever is written there. Yeah. There's not kind of, oh, this data is already there, would you like to overwrite it? No, it is overwritten and it's gone. So this is why there's a little bit of security mechanism. Run all cells. We go to the API, we download all the stuff. These were 3 series. We're just checking something there. Now it gets a little bit painful because of the way these menus work. So you need to restart kernel and run all cells, because otherwise it's not going to pick up the new menu. So my collection day, because you choose daily, and now you need to again run all cells, because then it actually passing. And here you have Matic-ETH, yeah, and now we can put a range at Matic-ETH, because we did restart all cells. We unfortunately lost our white. We could have changed this here, weight chart elements and look. If we had changed this here, plot dark equal false, then after a restart, we are still at white. Okay, but because we restarted, we need to go back to source data selection. We need to go back to my collection day, run all. I think they were the correct ones, but just have a look. Source data selection, Matic-ETH. We have Matic-ETH. How does it look? Well, let's do a slider strategy. Let's just collapse all code because it's really annoying. Strategy selection, let's only do the slider, so then we don't have that much crap around. So run this all. And then how does our data look? Well, the first thing is, because it starts at 100 and then there's this massive thing, starting it here is maybe not the right time to start, because this is this massive trending market. So maybe we want to look at this period here, see how this is going. So the length is what? The length is around 15% maybe of the total data set, and we start maybe at 25%. So let's have a look. So let's start date is roughly 25%, and the length is roughly 10%. Run all. Yeah, we are much better here, but now you see actually the data is a little bit boring, as in, so we maybe want to, because now we're looking at a short time period, so why don't we spice it up a bit, and we do high frequency interpolate, and only the high frequency, and also it's much more fun to trade upwards trending markets, so why don't we invert the data series? So inverting the data series just exchanges the risk asset and the cash asset. Now we have a high frequency thing trending up. Now obviously our range is not particularly well placed. We want to do it a bit higher, and we might want to do it, for example, a bit thinner to extract maximum value. And see, this is already a little bit better, but we need to actually still make it much tighter, much tighter, but we probably moved it a little bit too high. So let's see how we're here. Run all cells, and now we made a decent. Now we made a decent profit here. I mean, okay, the market is, so let's do how we did against HODL. Let's hope we made money against HODL. Chart elements and look, plot value HODL. Run all cells. Charts. Yeah, so HODL is flat-ish. It's a bit up, but not that much. And we are going. We still make 60%. Somehow you make always 60%. When you do these kind of things. Obviously, the trick is to get the strategy ahead of time and not optimize it once you saw the data and then fit the strategy backward looking. But the point is, if you have a view that this is the range that Matic ETH is going to be trading between 2,000 and 3,000, then that is a pretty decent strategy to put up. And certainly what the simulator helps you is to understand what kind of strategy would have made money and how would I have made more. And it's actually not always obvious. So just say, look, we have 1,600. Now, if I make the range a little bit thinner, but I'm not going to go all the way up all the time. So if I make the range a bit thinner, I can change this here as well. So let's do 7 here. Run all cells. Did I make more or less? Actually not that much. So I made, I don't know, it's actually not clear whether I made more or less, right? So it's interesting if I move the strategy a bit down and go a bit wider again. How can I optimize it? No, now I completely screwed it. Why did I completely screw it? Because I didn't manage to dip in the green range at all. So I put it too high. So it's actually very interesting. Okay, and now I obviously moved it the wrong way around, which is not helpful. That's the reason why I really don't like trading, because when you do these kind of mistakes, you can get into trouble. So it still needs to move a tiny. The slider strategy needs to move a tiny little bit up. Run all cells, charts. Yeah, but you see, actually, it's still only at 1,400. So I was trying to kind of improve things, but I actually didn't manage somehow. It's really quite interesting. You have a data series and you try to get an intuition for how do I put my ranges to maximally extract value from a given market scenario. And I find that it's actually less intuitive than you think, which is why the simulator is also really an interesting training tool to kind of get a feel for translating a market view into how do I actually set my ranges, and how does Carbon react? Do I want thin ranges? Do I want wide ranges? Do I want a wide gap? Do I want a thin gap? Where do I want to place it? When do I want to review it when I go out of the ranges? So then what happens to me if I miss a trend? Can I do something if I miss a trend, or can I put another position or something like this? So that's all the questions that you can do here. Oh, the last thing that I wanted to do is I want to show you one more thing. Strategy selection. These strategies here are all, if you're familiar with Python, they're all lists. So let me show you one thing. You can stick two together, and you probably want to do run all. Actually, when you do this, you probably want to restart kernel and run all, because the strategies might not be read again. And if I did this all well, yes, I mean, obviously this didn't particularly make sense, but you see that you're now running two strategies. We now need to start again a little bit later. Start date, just put the start date a little bit later. And this one is now actually running two strategies. They're not necessarily particularly well placed at the moment, but if you want to run more than one Carbon strategy at the same time, you can actually do this in the strategy selection just by adding them up. You can add as many strategies as you want into these things. You just separate them. You just separate them with commas, and you can also mix fixed and from MGV and Uniswap. You can do whatever, whatever you want here. Yeah, so the last thing, so directory listing, this kind of is just reminds you what you have done, date, time, and date, time, minutes. I don't know whether it's UTC. That's if you live in London, it's always hard to know whether something is a UTC time or a local time, because our local time is UTC. But it's going to be one of either. I don't know what. The whole point is that you get them chronologically ordered when you order them alphabetically. And here you get the zip. You just get the output. That's the data. And if you look at your files, then good question where they are. Yeah, here, they're here. So charts.zip are here. You can just download them on your, so all the charts that were in there, if you do download, you just all download them on your desktop. I now have them in my desktop. If I double click on one, well, it doesn't help because it doesn't open in a browser. But anyway, trust me, they're there. And charts.x is a Word document that contains all your charts that you can download and open in Words or import into Google Docs, and then you have all your charts already in one document and can deal with them, which is obviously helpful if you don't run this thing locally, because your binder is gonna disappear. Let's see a last time whether we're gonna get our binder to run. So I'm so happy that I found Jupy Lite, because binder is great when it runs, but when it doesn't run, it's very annoying. And if you want to do some work now, then it's great when binder comes back in 2 hours. But if you can't work on it now, then this is not fantastic. Generally, this one is going to be possibly a slightly newer version than the one on binder. Depends a bit. So nothing has changed recently, but when we're doing work on these things, that things might change a bit fast. So this version might be a little bit ahead of this one, but these things are relatively stable. At this stage. Okay, I think Yeah, so last thing, to do here, so I'm opening this here. I was thinking about whether I do a demo. If you do this locally in the Excel sheet, you edit it locally, you can literally also do all kind of interesting experiments there. Because you want to change ranges programmatically, your life might be easier if you do it in Excel. Because if you see it, can you actually see the formulas? Well, here it's always all false and true, but there is all kind of formula magic in here that moves the things around, but I don't quite remember where. So I found it actually quite good. These scenarios. This is A for demos, and it's also quite useful for really running various scenarios where you want to do similar things. You want to change one parameter in a range. This is actually more efficient than running it on a workbook. And the way these things are done is literally everything that has the same name here belongs to the same group, and as soon as you change the name, you start a new group, and this just starts counting with a little bit of Excel magic. If you do an old group, if you would call this intro again, this would just make a new group, so it wouldn't go to this group again. So if you run it locally, I invite you to do these things. I think the data fields are pretty obvious. They're essentially the data fields that you also see in the sheet, and these things have in-cell drop-downs. What you can do, mostly you want MGV, but maybe you want a fixed range or Uniswap v3, and then you have different data fields, but you have all the example data, how it's done. It is all here. Okay, and our binder is still not there. So if you have any questions, please feel free to ask them. Otherwise, we can watch whether binder comes to life or whether it won't work this time.
Thank you so much, Stefan. I don't think we have any questions at the moment. If we do, if they come in here, there is a Carbon channel with the simulator there, so anybody who has any questions regarding the simulator can post those there, and if Stefan doesn't see them himself, then we can always flag him and ping him and get him to answer those questions.
Oh look, so I have no idea what happened now, but now it thinks that it needs somehow it lost the container image and now it builds the whole thing. So this, you're in for like 5 minutes or whatever on binder. So binder is really super cool when it's working, but it can be a little bit temperamental. Anyway, so if there are no questions, then I thank everyone for attending. No questions in 3, 2.
Thank you so much, Stefan.
1. Thank you guys. Thank you guys for attending.
Thank you.
And, yeah, ping me with questions if you want to.
Great. Thank you so much, Stefan.
Thank you.